Hello, welcome back again to my channel. In the first video, we had prepared the income statement. In this video, we'll be preparing the statement of financial position using the net profit figure that we got in the first video. If you haven't already subscribed to this channel, please subscribe so that you would subscribe and set on your notification button as well, so that whenever I post videos, you would be able to receive notification for those videos that we can continue learning. Okay, so the statement of financial position as at 30th June 2015 is what we've been told to prepare here. Just to remind us that all of the items highlighted in yellow or mustard is the figures that we had used in preparing our statement of our income statements. So now let's prepare our statement of financial position. We'll start with capital. So just like we did in the first video, we say progression using whatever item we have on our trial balance. We could have said the progression of preparing the statement by working with what we have on our the templates, but we'll start with what we have on our trial balance. So capital, here we're told capital. So we'll pick capital item. And our capital is 19,956. So we'll highlight that we've taken this. Okay, so we have sales. No, that's, all of those highlighted ones are income statement item. Cash at bank, it's a current asset. Current asset, so we'll pick that. Then we have office equipment. It's a non-current asset. Non-current assets. Non-current assets, so we'll highlight that. Trade receivables, current assets. Current assets. Drawings. So I'll pause with drawings and come back to drawings. Trade payables. Trade payables is a current liability. Trade payables is a current liability. Current liability. Motor vehicle, non-current assets. Okay, so we'll highlight this. What else? So we have all the items except for drawings. So I'll come back to drawings. Yes, closing inventory is a current asset. So we'll pick closing inventory. Closing inventory is a current asset. So that they're the same. And we call that closing inventory. Closing inventory. Okay. We'll come back to drawings. But before we go back to drawings, let's start with non-current assets. So let's calculate that. Non-current assets, we're told 6,000. 6,000. We add 7,500 to that, and that gives us 13,500. 13,500. So our non-current assets is 13,500. Current assets, we have 1,950. We add 10,353. We add 8,100. Our current assets is 20,403. So we'll bring that here. So when we add our non-current assets and our current assets, that gives us our total assets. So we add that to 13,500. So our total assets is 33,000. Bring that here. Simple. 33,903 is our total assets. Straightforward. Okay. Let's come to, when you remember our accounting equation, our assets is equals to capital and liabilities. Our assets is equals to capital plus liabilities. So this figure we have here also has to balance off in our capital and liability. If you haven't watched the video on the accounting equation, please you should watch that video. Okay, so we have our capital here. What are the things that we said can increase our capital, and what are the things we said can reduce our capital? What can increase our capital is if we have retained earnings. So we have net profits that has been retained into the business. In our last question, so when we solved the income statement, so in the last video, we got our net profit to be 7,917. That was our net profits figure. And then we're going to then deduct drawings. So this drawings is what we're going to deduct. If you remember, I said we should pause on drawings. So we're going to then deduct drawings. And our drawings is 4,200. We're deducting drawings. So now we can highlight this as green. And this tells us that every item here has been treated. Okay, so for lesson drawings, we'll put that just to show us that this should be subtracted, or we'll highlight it red. So we'll go back to our calculator. We have our capital of 19,956. We add our net profits of 7,917, and we deduct our drawings. So we said drawings reduces owner's contribution in the business. So our capital now, the owner's contribution in the business is, so NW Agnes contribution in this business is 23,673. Okay. Non-current liability, there was no non-current liability, so no liability that is exceeding more than a year, or no obligation that the repayment is beyond this current financial period. Current liabilities, we had trade payables, and that's 10,230. So we'll bring that here as 10,230, and we add that to our capital. So our capital and liabilities, we add this 10,230, and that gives us 33,903, which is the same as our assets. So this is the same as our assets. I just wanted to highlight it for it to also look like the other bits, just my drama. Okay. So you see that our total capital, and total liabilities is same as our total assets. And that's when you know that, you are correct. That's how you know that you're correct. So I hope this is clear. In the first video, we had prepared the income statement, and now we have looked at, we've prepared the statement of financial position. We'll end with that for now, and in subsequent videos, we'll begin to progress to more, more complex questions. I'll see you then. Bye.